This Week in Economics from WBRN Radio in Boston and on the Bostonred Network on the 9th of December 2017. This report is about jobs and job creation. We'll look at the latest from the Bureau of Labor Statistics, the household survey, and the established survey also. Nonetheless, non-farm payroll increased by 228,000 jobs in November. The unemployment rate was at 4.1. That is from the Bureau of Labor Statistics. And the date on this, incidentally, was on Friday, the 8th of December. The household survey data, the unemployment rate held at 4.1% in November. The number of unemployed persons was essentially unchanged at 6.6 million over the year. The unemployment rate and the number of unemployed persons were down 0.5 percentage points, 799,000 respectively. Among the major worker groups, the unemployment rate for teenagers at 15.9. In November, the jobless rate for adult men, 3.7%. Adult women, also 3.7%. For Europeans, 3.6%. For African Americans, 7.3%. For Asians, 3%. Latinos, 4.7%. Little change there. But long-term unemployed, those jobless for more than 27 weeks. Over the year, the number accounted, for 23.8% of the unemployed. Over a year, the number of long-term unemployed was down by 275,000. So some slack is coming out of the economy, running at roughly 4.1% over the year. The labor force participation rate, 62.7 in November, has shown no clear trend over the past 12 months. The unemployment population ratio was at 60.1%, little change in November, and has shown a little movement. So in other words, the participation rate has been around 62%, 61% for roughly the last several years. That really has not changed, and due to demographics of the unemployment circumference, we'll see a little change there as baby boomers retire. I was just talking to a fellow today that had retired from 35 years with the Postal Service. So we are seeing more and more of these retirees occur, and in some work situations they are not being replaced. The number of persons employed part-time for economic reasons, referred to as involuntary part-time workers, was at 4.8 million, essentially unchanged in November, but was down by 858,000 over the year. These individuals would have preferred full-time work if it was available. So you're seeing some slack coming out. In November, 1.5 million persons were marginally attached to the labor force, down by 451,000 from a year earlier. Not quite 500,000, but going in that direction. These individuals were not in the labor force, wanted and were available for work, had looked for a job sometime in the 12-month period, prior 12-month period. They were not counted as unemployed because they had not searched for work in 4 weeks preceding. So there are a number of things going on here that skew the numbers, and this has been going on forever. I can recall when I was with Jobs with Peace in the 80s, it was basically the same regimen, although we did not have the complete data sets, and when they were completed, it took months and sometimes almost a year to get the full rate, because it had to come by a mailer from the Labor Department to get that type of data. And we started to quote-unquote revolutionize the process when we could actually go on the internet. At that time, recall having the GE internet service. It was dial-up service and Prodigy and some more of them out there. But anyway, we could dial up to the site and download the information. The total non-farm payroll employment increased by 228,000. Employment continues to trend up in professional and business services, manufacturing, healthcare. Employment growth has averaged 174,000 per month thus far this year, compared with an average of monthly gain of 187,000 in 2016. So if we look, this is interesting here. Actually, we've had less gain per month in 2017 than 2016. Employment, professional, and business service continued upward trend in November, 46,000 over 12 months. The industry has added 548,000 jobs. In November, manufacturing added 31,000 jobs. Within the industry, employment rose, machinery at 8,000, fabrication, metal products at 7,000, computer and electronic processing at 4,000, plastics and rubber products at 4,000. Since a recent low in November of 2016, manufacturing has increased by 189,000. Healthcare added 30,000 in November, most of the gains in ambulatory healthcare services, 25,000, which includes the offices of physicians and outpatient care. The center's monthly employment growth in healthcare has averaged 24,000 thus far in 2017, compared with an average of 32,000 per month. So actually, we are producing less workers in healthcare than in 2016. Within construction, employment among Pacific trade contractors increased by 23,000 in November and by 132,000 year over year. Employment in other major industries, including mining, wholesale trade, retail trade, transportation, warehousing, information, financial activities, leisure, hospitality, and government. Little change there. Usually we add, particularly in retail trade, but retail trade has been hard hit by redundancies. The average employment number, we had that. Average work week was increased, the payroll increased by 1/10 to 34.5 hours in November. In manufacturing, the work week was unchanged at 40.9, a little built-in overtime there. Overtime remained at 3.5 hours. The average work week for production non-supervisory workers was unchanged at 33.7 hours. In November, the average hourly earning for workers on private rose 5 cents to $26.55 over the year. Average hourly earnings have risen 64 cents or 2.5%. The average hourly earning in private sector production rose a nickel or 5 cents at $22.24. The change in non-farm payroll employment for September was revised up 18,000 to 38,000. Was a dismal month. The change for October was revised down from 261,000 to 244,000. Not unusual, some transition from the summer there, but usually not as much Previously reported monthly revisions resulted from additional reports received from business and government agencies since the last publication. After revision, job gains have averaged 170,000 over the last 3 months. So that is basically it. Revision of seasonal adjusted household survey in accordance with procedures. The employment situation news for December of 2017 is scheduled for January the 5th, 2018. Seasonally adjusted data from the most recent 5 years are subject to revision. The release of the January 2018 data will be on the 2nd of February. The establishment survey will revise the industry classification for 2012. The conversion to 2017 will result in minor revisions reflecting content changes within mining, logging, etc. It's about time they do this. Industrial classification system, they call it. The North American Industrial Classification System. Anyway, approximately 4% of employment will be reclassified into different industries as a result of revision. Details of new and discontinued and combined industries is due in the 2017 North American Industry Classification System. And we'll see those changes in January of 2018. So that is where the unemployment stood. We'll go now to Reuters, I believe, so we can get the latest here. Pepsi Cola is moving to NASDAQ from the New York Stock Exchange. They've been there roughly 100 years, a very, very long time. The Pepsi traces its listing back to December 18th, 1919, when it was known as Loft Inc. The tech-heavy NASDAQ, we always give that result. They have Apple and Google there. Let me just get the Reuters survey here because you have a little different situation. Not the figures, but a fairly upbeat report on the scores. The economy's strength and could fuel criticism of efforts by Trump and his fellow Republicans to slash the corporate rate to 20%. There is some talk in some corners about using 22% as the benchmark. Republicans argue the proposed tax cuts will boost the economy, allow companies to rehire workers, but with the labor market near full employment, companies report difficulty in finding what they call qualified workers. The White House said the report was a sign that the vision of DJ Trump is paying off. The economy grew at an amortized rate of 3% in Q3, the fastest in 3 years, appeared to have maintained the momentum of early October-December quarter. The average, well, we won't get into that one. Some of this information we had, the concept of full employment had no impact on expectations of the Federal Reserve. Now, the Federal Reserve's meeting will be in the coming week, the 12th and 13th. The central bank has increased the rates twice minimally. Of course, the economy must create 75,000 to 100,000 per month to keep up. So roughly, if you look at the figures there, 100,000 just to keep up. So you're creating about 75,000, give or take, more jobs over just keeping up. The unemployment rate has declined by 0.7% this year. Broad measurement of unemployment includes people who want to work but given up searching for work. Ticked up 8% last month from 11-month low of 7.9% in October. Now, people who want to work and give up searching, they cannot find a full-time employment. Economists believe the shrinking labor market slack will unleash a faster pace of wage growth. We haven't seen that as of yet, and some inflation actually could come out of that. Some say wage growth is being understated. Well, it isn't. It isn't. Most recognize that the average hourly is a flawed gauge here, since it is currently being held down by the fact that high-paid older workers are retiring, and that is from Michelle Girard. She is a chief economist at NatWest Markets in Stamford, Connecticut. Well, it is flawed. There's no doubt about that, since it's currently being held down by the fact that high-paid older workers are retiring. No doubt about that. And as the high-paid workers retire, they are being replaced by workers that work at less. And we'll have to get some of that in here. And the growth in construction was increased by 24,000. It's a little insight, thanks in part to rebuilding efforts in areas that were devastated by hurricanes after rising only 10,000 in October. Manufacturing, another month of solid gains, 31,000 there, after rising 23,000 the prior month. Retail grew by 18,700 last month, largely since the largest since January. Department stores increased only 3,100, and that's holiday seasonal work. That in itself is a kind of dismal. One other thing here, DJ Trump has said fines against Wells Fargo should increase, whereas his Treasury Secretary said they should be given a break. This is the third largest bank on Twitter. Fines and penalties against Wells Fargo and Company could be hiked amidst an ongoing sales scandal. Fines and penalties against Wells Fargo for their bad actions against their customers and others will not be dropped, as had incorrectly been reported. The new acting director, now this is the Consumer Financial Protection Agency, was reviewing whether Wells Fargo should pay tens of millions of dollars over alleged mortgage lending, according to three people of it have the knowledge. They're based in San Francisco. They duped millions of customers and sold products that were not wanted. Last year, the bank paid $100 million to the Consumer Financial Protection Bureau. The House referred to questions. This is Mulvaney, the new interim director there, is the fellow that said to give them a break. Mulvaney told reporters this week he was reviewing more than 100 enforcement actions currently in work, including litigation cases that are being settled and investigated. Mulvaney said he would delay at least 2 law enforcement actions without naming them. It is thought this Mulvaney character is a friend of the corporate sector controller of currency. Now, this agency that regulates many large banks wants to ease up on severance pay restrictions imposed on Wells Fargo in the wake of the scandal. The Republican-controlled Congress killed a rule that allowed customers to band together to sue financial firms over that is called a class action. There, Richard Cordray, who left the agency, an unfortunate move, approved terms of a settlement with Wells Fargo. Legal expert says highly unusual for a president to weigh in on specific financial enforcement actions. Every regulatory chief typically do not comment on these matters. Potential higher fees appears to only have a moderate impact on the shares of Wells Fargo, which generated $20 billion in annual earnings. It was up 0.5% to $59.39. That in itself is these days an unusual situation. Let's go to the BBC here, and this is in the UK. Manufacturing sector expanded for the sixth consecutive month. Official figures show British factories nudged up the longest run of expansion in 20 years. Manufacturing input increased 1/10 in October compared with the previous month. Despite a relatively subdued October, Kay Davies of the Office of National Statistics said the long-term picture is one a strong annual growth in factory input at 3.9% in October, the biggest since December of 2016. Manufacturing is part of a broader industrial sector. The measurement of output was unchanged, and output construction unexpectedly contrasted at 1.7% in October. Economists had expected a 0.4 rise. Davies said construction output continues to fall back from its peak at the start of the year. This is one of the things in our seesaw model that's primarily in the U.S., but to the U.K., if you see one sector of the economy improving, another sector falls back. The U.K. trade deficit in goods and services widened by 300 million pounds to 1.4 billion pounds in October. The goods deficit also widened to 10.7 billion pounds from 10.4 billion pounds the previous month. So you're having these continual contrivances in the UK, and they're reporting out here, and we'll look at some of the information from the Office of National Statistics here. Construction output in October 2017, new orders June to July, and we will pinch this on construction output in October. This is in the UK. Total of all work 12,417,000 of new work, 8 million there. And total repair and maintenance 432. So this is some of the figures out there as to where they are in the public sector 804, private industry 393, and private commercial 230. So there have been some differences there, and this would go to the spreadsheet. We won't worry about that, but definitely had some drawback. A difference in 3 months and 3 months of volume from different sectors. Construction fell by 553 million in output fell in October. This fall has been broadly driven by decrease in repairs, maintenance, with house repair maintenance falling by 265 million pounds, etc. there, and maintenance decreasing by 144 million pounds there. So it has not been rosy for the construction industry in the UK. it has been a more dismal type of situation there in construction. And we look at businesses here. I don't think we can get that. Anyway, let's move on here and do the markets. The BBC Global 30 on a Friday at 58.80. The FTSE All-Share at 38.39. In Amsterdam at 2.17. The DAC was at 108.55. In Paris, 15.23. Everything is in positive range here. In Brussels at 31.002. In Madrid at 58.50. In Zurich at 48.59. In Moscow at 1.84 on Friday. And in Johannesburg, the all shares there were down to 94.82. In Bombay, 301.90. In Karachi, 295.34. In Lahore, they were down 45.11. In Colombo, they were also down negative 7.74. In Tehran on Tuesday, 115.60. In Sydney on Friday, 16.60. The Nikkei in Tokyo, 313.105. The Hang Seng also on Friday at 333.66. And in Shanghai on Friday, 17.94. The Dow, 117.68. The Tech-Canadian Nasdaq at 27.24. The Merck, that's the commodities market out in the Midwest city of Chicago, at 14.52. And in Sao Paulo on Monday, 1,046.17 in the negative, and also in the negative in Mexico on Friday, 648.42. Been in the negative in Mexico for quite some time. On to the commodities. Brent crude futures at $63.33. The spot was at $58.59. It gained 98 cents. The Brent crude at $1.13. Texas Intermediate crude up 64 cents at $57.33. T-Boone Pickens jumping for joy. Another $15 a barrel oil. And gold down $10.95. I suppose if you look at Bitcoin, which is on the move, I think it's at, what is it at now, 13,000 maybe? It moved past 10, it was 11, but nonetheless, a gold at $1,245.85. Dubai Gold futures were up $2.30 at $1,250.40. Silver was down 9 cents at $15.82. On to Euronext Life futures. Cocoa was, holy moly, cocoa was up futures 226 there. And Robusta coffee was up 154. Holy moly. That is 8.9 and 17% on cocoa. So these commodities are really going up. Winter wheat was down 75 cents. Winter feed wheat was up $3.60. The Bloomberg Commodities Index, which came out on Wednesday at 1550, 85.59. So it's up too. Everything is up. And we are out of here. We'll see you next week. Hopefully we'll have more data as we move through. Nothing from the retail sector. This holiday season, we're on the 9th now, and it appears, as far as retail is concerned, the bulk of their trade was on Cyber Monday, Black Friday, and post and pre-Thanksgiving holiday, the busiest holiday in the U.S. For travel. And everyone, I suppose, bought the Santa presents, more or less. I haven't seen a lot of activity. There are some sales arising because, again, it is not an even pattern. It depends on, obviously, which stores you are looking at. Online, some people were getting as high as 30% off. I didn't see any 50% off, but that could be coming along, possibly, as we get closer and closer to the last week of December. We did see at some retail, I can't remember which retailer it was, winter clothing is starting to come on sale. Now, throughout the country we've had snow. In Roy Moore's Alabama, there's snow there. In Pensacola, where DJ Trump was on Friday, it was in the 30s. So that is a little unusual for that far south, but it has happened in the past. They've had temperatures that are in the 30s. Short periods of time also have snow. They've had 5 or 6 inches, I believe, in Alabama. They have snow across the northeast. It's extended down to Atlanta. Delta had to cancel some flights there out of its hub in Atlanta, Georgia. So they're having a winter season early, whereas in other parts of the country it had been unseasonably warm, now to the 20s. But a few weeks ago in places like Chicago and Minnesota, they were in the 50s and some in the 60s, even in the Dakotas. 2 weeks ago they were up to 70 degrees, unheard of there. For those in business, have a productive week. For the consumer, keep your eyes on the prizes. There are more things coming because there's still some slack in the retail sector. Now you'll see the Sears of the world and some other retailers that have these brick and mortar stores will only be open till the end of December, early January, and they will close. Now some of those people will be having final sales, so you want to obviously look for those. That's the brick and mortar operations of the Sears, the Kmart's, etc., and some other retailers.